Welcome back, traders. And thank you for being here. Welcome to the Trader Roundup podcast, where highly attuned, like minded traders come together to become 1% stronger each and every day. My name is Rodrigo Antonio, and I'm your host for today for Mindset Mondays, where today I'm going to discuss cognitive biases. And I'm going to discuss the most common cognitive biases that plague traders. And the fact is, most traders are actually unaware of these cognitive biases. I mean, most of us are in most cases. So today the objective today really is about identifying what these cognitive biases are, how they come about, what sort of triggers occur, and how to take actionable steps in order to mitigate them. And because if they are not addressed, they can cause a lot of destruction. They do lead to a lot of self sabotage. And that's what the topic for today is. So, this is a live broadcast. So, do let me know in the chat. Type a one in the chat if you can hear me. And if you can see, that will be greatly appreciated. Fantastic. Lovely. And just do let me know where you are tuned in from. What country, city are you representing? Would love to know where all of you are. And again, I want to thank every one of you for spending a bit of time, a bit of your time with me today. It's a Monday and it's the start of a new trading week. And I want the content for today, the conversation of today, to be about giving you the right mindset, the right thought provoking and valuable information so that it prepares you for what's coming ahead. Because what comes ahead when we're trading is we are going to war. We are going to battle. Every time you switch your machine on, every time you open up the charts, you are entering into a battlefield. And you might think that you might think that the enemy is the market and other traders, but you are far, far, far mistaken, my friend. The enemy is within. You yourself are the enemy. And there are what's called cognitive biases, heuristics that are happening every moment of the day, of our waking day, that are channeling our thoughts and our behaviors in ways of which are not always beneficial for us, are not always going to give us the outcome that we desire. And this is just a reality. This is what we have to go up against. And the first cognitive bias, as you might have heard of before, is the cognitive bias. This cognitive bias is the cognitive bias I'm referring to here is confirmation bias. So, confirmation bias is the tendency to seek out information that confirms our existing beliefs or opinions while ignoring or downplaying contradictory evidence. Okay, so confirmation bias is personally my nemesis. It is what plagues my trading, is what makes my trading really, really difficult. And to be fair, most traders, because it's so difficult to identify. It really is. And how how do you know, right? How does one know that the information that they are seeking is has a certain bias to it? And of course, when we're trading, we have to determine a certain bias for the day, right? We have to determine whether we're going to go long or whether we're going to go short, right? In most cases, in most traders, that is the case. And once you've made that decision, we tend to ignore all other information. And this is what causes a lot of problems. Because in trading, confirmation bias can lead to very selective perception of the information. And we end up focusing on the information and the data that just supports our initial trade idea. So what one of the what when this happens, what it triggers overconfidence, and it also triggers poor risk assessment, and you end up with missed opportunities at times. And I'm joined here by my co-host, Kit ICT Concepts.
What up, what up, what up? Can you hear me?
Yeah, I can hear you. How are you?
Doing good, man. Just had a little live stream calling some price action real time, and it was pretty well. And I wanted to try and migrate folks from there to here. So that was kind of the idea. Um, but yeah, man, it was really good actually. I mean, day's playing out exactly as I thought. This cognitive bias that you're talking about, I find this topic fascinating. What drew you to want to talk about this today?
Well, for me, this particular bias, confirmation bias, this is what I is my nemesis. It really does plague me, and most of the traders that I work with, they suffer from this, right? And it's something that you I don't think there's a cure for it, but there is a way to reduce its impact there, and that's what I wanted to discuss. Sort of how do we reduce its impact? That's what I wanted to get into. Um, because confirmation bias, I mean, as a trader, we need to create a bias, right? And we have to then follow through with that bias. So then, how do we take into account the opposing bias? What if we're wrong? Have we considered how we could be wrong?
I think you frame up an excellent question, and one thing I don't think enough traders really pay attention to, and that's the market's going to go up and it's going to go down, right? Like it's never one way. So even when we're bringing a bias, I think we're bringing a directional bias at times that's more so than what we need. Like you already have to be extremely precise and correct for you to operate in the market. If you can create trade plans and trade ideas and have models that are independent of the draw on liquidity and is more emphasized on uh, short-term internal liquidity or uh, imbalances that are happening in real-time market structure. Um, I personally think more traders would find success if they were focused on their 10 handles in the ES, right? And framing up an idea and then holding an idea um, based on being correct within their narrative and within their framework to feel really comfortable and confident as to where price is indeed trajecting itself towards. So
Mm-hmm.
for me, I think the longer I've traded and the more I've kind of taken on kind of a teacher kind of role, the more I've found um, not getting hung up so much on a bias. On a consolidated day, you're going to go up to go down,
Mm-hmm.
right? If it's a massive trending day, yeah, you want your levels right. You want to have a lot of confluences for me. And like I had, for example, 42.12 as being um, I had 42.12 and 42.17 as being two prices I was looking at ES. The reversal point I had marked out at 212.75. And there was a zero drawdown reversal specifically on my chart that price printed into, and it happened. So being able to have those things anticipate those levels and for price to react to certain ways, I think you build confidence and you build bias.
Yeah.
So for me, that's the most important thing to do. Even
No,
in ranges, consolidated tight news bound ranges. Because
I
we're
really
gonna go
like
up, go
that.
down.
I really like that, Kit, because because you're day trading and you have specific models that you're looking for, you consider both scenarios, both the long and short. And so that dynamic way of thinking allows you to think more about risk, as in, right, it could go up and it can go down, but if it's going to go up, it will go up from here. It will take out sell side liquidity, then it will go up. And if it's going to
Yep.
go down, it will take out buy side liquidity, then it goes down. So you can take into account both scenarios, and because you have two scenarios, you're less likely to be over leveraged in one bias, because this confirmation bias, it does lead to erratic risk taking. This is one of the consequences of when confirmation, and then trader married to the bias, that they'll keep adding to the losing position, they'll keep shifting that stop loss, and we all know how that ends up. It's disastrous.
1,000%.
So I've got some really, really powerful questions that I want to give you guys. And I hope that you're taking notes, because if you're not taking notes, you're going to miss out. And if you want me to send you the notes, then I'll be more than happy to. Just go ahead and scan that QR code, click the link in the description, and complete the survey. And I'll send out the show notes and these questions. And in order to avoid confirmation bias, these are the questions that you can ask yourself, right? And this is critical thinking, guys, right? As a trader, you gotta be critically asking yourself these questions. So what evidence supports my current trading idea? And am I actively seeking out contradictory evidence? What are the potential risks and downsides of my trade? And am I objectively evaluating them? Another question is, what would change my mind or lead me to reconsider my trade? Have I tested my trade idea against historical data or similar market conditions? And finally, am I seeking feedback and diverse perspectives from other traders or market participants? One thing about the last question is, I would only ask other traders who are trading my model. Because when you start to have too many traders in your sort of black book, as they say, or if you're seeking, almost like you're seeking a validation from other traders that are not using your model, then you're going to get mixed signals, and you can end up doubting yourself. But it's very important. That's why it's very important to know your model. Have your model written out in a flow chart. If and when this happens, then this. And so when you do end up asking another trader for their opinion or anything like that, what is your bias? Even if they contradict you, at least you are aware of whatever that the contradiction is, whatever their bias is. But you take your, if you have a valid setup, you take it. And so these are some of the questions you can ask. These are critical thinking questions that you can actively counteract confirmation bias in order to broaden your perspective and make more informed trading decisions that are more balanced and based on the available evidence that you have. So I want to pose a question to you all now. And that is, what steps can you take to challenge your existing beliefs and reduce the impact of confirmation bias in your trading decisions? And we'll open up the chat. And what we'll do is we'll have a very quick, short break for you to answer that question, and we'll be right back.
And we're back, everybody. It's Kit ICT Concepts coming into Mindset Mondays with Rod. Want to welcome our host back. How's it going,
Yes.
Rod?
Hello, hello. I was talking to myself for about 2 minutes there.
I understand that. I do that all the time.
Yeah, I had myself muted. So thanks, Kit. There was a question I was this one here that I was answering, and then I'll get back to the others. This one here from M Reza. So So if you're feeling a sense of confusion at the start of the week and you don't really understand anything, it can mean either two things. One, your back-tested model, which includes not only the confirmation, the confluences that you're looking for, but also the market conditions, if they are currently not present in the market. Therefore, you should not be trading. You should be reading the tape. Or it could be that you are not in sync with the market, with the price action, and that could mean that there is an imbalance in your physical, mental, or spiritual state of mind, right, or state of being, or it could be a mixture of both. Because confusion, it's it's a signal. You need to listen to your mind, listen to your body, and if you're confused, it's best not to take live trades. It's best just to read the tape, focus on your habits, get back to a daily routine, get some good rest, clean eating, and just work on those basics until you have more clarity in your mind. So whenever there's confusion, just think about your health. Think about how you can realign yourself. And what I like to do is move on to loss aversion. This cognitive bias refers to the tendency to feel the pain of losses more strongly, is exacerbated compared to the pleasure of gains. And with loss aversion, it again is very common in traders. And look, we got to admit it. We got to be honest with ourselves. It really does suck to lose a trade. And it is, in most cases, it's a stronger feeling, a stronger emotion than hitting a string of wins, or and we tend to become so attached to our losses that they're still in the forefront of our mind. In fact, some of us even lose sleep. Some of us are sitting on the dinner table with our families, and all we're thinking about is how we screwed up, how the market took our money. And this is a it's very detrimental to your trading, because you end up reluctant. It causes traders to not want to take a loss. You're reluctant to come out of a losing position. In fact, some of you are guilty of moving your stop loss so that you don't get stopped out. And sometimes the market rewards you for doing the wrong thing, and then you think you can do it again until you take the mother of all losses and you blow up your entire account because you just did not respect your stop loss. Because when loss aversion occurs, you're hoping that the market will reverse, allowing you to recover these losses. And we see this on the chart all the time. You can see it in the price action. You can see where longs were trapped, and you can see where shorts were trapped, and you can see where they come out around parity, when they come out quote unquote break even. You know, the classic breaker. You know, this is a point at which, if it's a bearish breaker, that means longs that were trapped are getting out. So this has loss aversion. You got to keep an eye out for it, because it can also lead to excessive risk taking, massive risk taking. Because if you're holding on to losing trades for too long, if you're moving that stop loss, then you're gambling. That's not trading. That's not trading with an edge. As soon as you start to shift the stop loss, you're no longer trading your edge. You're now trading your emotions. You're now trading your greed, your fear. And this is very, very dangerous. I come across this often. And there is a remedy, right? And it comes down to discipline. It comes down to having a risk management strategy. So this risk management strategy, it predefines your stop loss levels, but you got to respect them. You got to respect them. You got to be able to take it like a man, take it on the chin, accept that loss. Soon as you place the trade, or even before you place the trade, mentally accept the loss. So you need to set realistic profit targets, and you need to stick to them as well. I've been guilty of this. I've got my profit target, price reaches there within minutes, and I think to myself, wow, I'm already at TP1. This is going to the moon. I'm going to hold it for an extra 2 hours. But that's not trading with an edge. That's trading my desire. And in most cases, over a large sample of trades, guess what happens? Price hits my TP level. I remove my take profit or my partial, thinking it's going to go into more profit, and bam, slams all the way back towards my entry point, slams into my stop loss. Then at that point, revenge kicks in. I want my money back. And then it's a domino effect. Then it's self-sabotage, right? All because of loss aversion, all because I decided that I wanted to shift my take profit, or I wanted to shift my stop loss. So it's important to establish clear exit points based on analysis that's been proven and back tested. And it's got to be in line with your risk tolerance. If you can't go higher than a certain lot size, then don't do it. Or you can't risk a certain dollar amount. If your heart rate is up and you're a little bit out of breath when taking risk, that means you're risking too much. You need to reduce the risk. You need to be really comfortable with the risk, really comfortable. Otherwise, you end up falling into the trap of holding on to positions for too long due to loss aversion, because you think, oh yeah, this is going to end up, I'm going to end up back on break even. I'm going to hold it. And so you can see how the first bias, confirmation bias, and how loss aversion are both related. So let's have a look at these comments. See, the chat is quite busy here. So let's see. Have you got any? Do you see any comments that we can discuss? Yeah.
I mean, I think stop loss is a big deal. I like talking about that when we're talking about loss aversion. I think from a technical analysis standpoint, you really want to get good at managing a tight stop. Getting better at managing a tight stop, you can be wrong more often and it can cost you even less. So I personally think the tighter the stop loss within your trade plan and your trade plan idea gives you more times to be wrong, quite frankly. And you're going to be wrong, right? But the idea is you want to be right. So I think being wrong quickly, decisively, Opening my eyes that my stop losses have been too tight. Ooh, be curious about that. Loss aversion. I mean, what a great topic, buddy. I mean, seriously.
Yeah. So I want to pose a question to you all. And that is, what is the longest period of time you have held onto a losing position in the hope that it could turn around? How did it impact your overall performance? I want you guys to think about it. Because imagine how the impact, not only would it impact you today, but it will impact you tomorrow, next week, next month. Because sometimes you get rewarded. Sometimes the market just does, it rewards you for doing the wrong thing. And that is when you begin to establish negative habits. So we'll jump into a quick break and we shall be right back. Welcome back. We have Nathan here saying, held a trade for a few weeks and it had a negative impact that lasted months. Wow. This is an example of loss aversion. Nathan, I appreciate you sharing this and being honest. This is why I wanted to jump on today. I wanted to share these cognitive biases with you to draw your attention to what's happening in your subconscious that you don't even realize. And it's so that what's happened to Nathan doesn't happen to you. What's happened to me doesn't happen to you. So appreciate that, Nathan. Appreciate your contribution. Appreciate everyone here. And I want to move on to the anchoring bias. So the anchoring bias is when traders rely too much on specific reference points or initial pieces of information when making decisions. I'll give you the easiest one, right? A simple one. When you're still thinking about yesterday's losses, you're still thinking about the mistakes you made yesterday, and you're bringing that baggage with you. You're holding on to that hot potato, as they say, into today, into today's session, right? You're anchoring what's happened previously to make and govern your decisions today. But how effective is that? And this is something that, for me, we all suffer from. You can't get away from anchoring bias. I think we all at some point experience this, and that could be with family, those we love. that we're still thinking about that time when they said this or they did that, and we haven't forgiven them, truly forgiven. We're still holding on to that pain, that grudge. And we do the same thing with our losing trades, but we also do it with our winning trades. We also thinking about yesterday's big winner, how yesterday we were Billy Big Bollocks. We smashed it. But we bring that into today's session as if it can repeat itself. Right? So if you're fixated on on these things, you're going to struggle. You need to be very, very, it's very important that you go into every trading session fully reset, fully detached. That's why in the morning it's so important for you to exercise, hydrate, meditate, get really present, because in the present moment, the past does not exist. Neither does the future, only the present. That's what the purpose of meditation is, to become present, practicing mindfulness. Be mindful of how you're feeling, what you're thinking, what you're seeing in the current price action. Another really good practice is to clean your charts every morning. Delete everything. This is a piece of advice I like to give traders. Clean chart, clean desk, clean mind. Really look after, like really have come into each trading session as fresh as possible. New eyes. And I know it's hard. I know it's difficult. So Kit, how I know you like to meditate. Have you
I
know
do.
have you noticed what your trading is like on the days you don't meditate? What is it like?
Um, I mean, my best healthiest routine is being active before I hit the charts to some degree or another. I like, if I'm trading London, I like to wake up, meditate, kind of shake the cobwebs off. And meditating for me is just kind of focusing on breath, focusing on my nose, sitting up, sitting upright, really getting a good breath from my diaphragm, but really trying to breathe through my nose. And I try and kind of turn off my mind while at the same time kind of trying to think positive thoughts, similar to what I think people do when they exercise, right? So um, for me, that's what I do when I meditate, and I find that when I do these mental exercises and or physical exercises in the morning, then it gives me a refreshed outlook, a clarity on the charts. Because I feel like every single day that I come to the charts, that I'm not in a routine, that I'm not in a rhythm, then those are days like, it's like the cable, like you're not just, it's not coming, it's fuzzy, right? Like you don't see the market always as clearly as you do other times when you get in these really healthy habits. So for me, the healthy habits help bring clarity, and I see a reward for doing it just based on that alone. So meditating, physical exercise, all of that for me. So my boy Pips, this is true. I teach my students to clean their charts at the end of each trading day and only mark the previous day's range with buy side and sell side liquidity and PD arrays. I love that.
Yeah.
I I mean I find staring at price fascinating. Um, we're slapping against the midnight price. I know that's not the conversation, but I'm staring at price while we're doing this. So anyway, um, I believe meditation is what it's about. Learning to admit you're wrong. Here, let's show this. Learning to admit you're wrong quickly and spotting a losing position to exit early is really key. Some people don't like admitting they are wrong. That's why they keep holding the trade. Wow, lot of truth in that. That's for sure.
Yeah, definitely is.
How about for you, Rod? Like, what's your morning routine look like? I mean, are you doing are you
Yeah.
doing meditation too, or like what's your? I know you pray a lot. Like, what's your morning routine?
So for me, yeah, I start my day with prayer, and it's usually between, depending on the time of year, between 4 a.m., 5 a.m. And it is a difficult time to wake up, especially if I get anything less than 7 hours sleep, which I'm probably averaging 4 hours sleep. So if Backtest Jess is listening in, I might I might need to book a session with you. My sleep hygiene is not very good at the moment. So yeah, typically 4 or 5 in the morning, pray, and then I'm in the gym for 6 a.m. And the reason why I'm in the gym at 6 a.m. is, again, movement is so important for me to get really into high peak performance state. So I typically will spend between 45 to 90 minutes, high intense type workouts. Even if I'm doing weights, it's really intense. Like I go in, and I find it difficult to go gym on my own. So I have some friends that I meet up there, and it's really good for accountability. Like these guys, knowing that they're going to turn up 95% of the time, knowing that, or 90% of the time, letting them down is what motivates me to get to the gym. So I'm in the gym and I'll spend some time in there. Once my workout is finished, I go into a sauna for 20 minutes, and within that 20 minutes, I will meditate. And within that meditation, there is gratitude, there are affirmations, there is visualization. And then once that's over, I head outside, even if it's winter, and I start to do some Wim Hof breathing. So typically with Wim Hof, I'm doing 3 or 4 rounds, 30 to 40 breaths. And if you don't know what that is, it's a breathing technique which I recommend everybody try out.
We
Just
do it every day on affirmations and models at
yeah,
7:30.
yeah, it's such a powerful practice. And that feeling that I get in the sauna where I'm really relaxed, and obviously I've had an intense workout, I'm a bit like, oh, I'm not feeling so energetic. The Wim Hof, wow, that's like having 10 espresso shots, and I feel absolutely on fire. I'm ready to take on the world, and I'm leaving that gym with full energy, and then I head out and do my I'll do the school run. So that's once I finish the school run, then I come home and I start preparing for New York session. So I don't tend to trade London with this routine. um I like to trade the New York session just so that I can have that morning period to really put myself into peak state. So yeah, that's my morning routine. It's yeah, it's quite, some people would say it's a bit extreme. Some people say, well, that's a lot. But I mean, it works for me. It's years in the making. It's not an easy thing to do one day or the next. And some people don't even have access to, obviously, the facilities, etc. So I know massively privileged, and I love my routine. I love my morning is just it's me time, right? And I highly recommend all of you to have a morning routine. You must have a morning routine. And in fact, one big advice that I'm going to give each of you is start your day the night before. So the night before, you need to already have planned what time you're going to wake up and what you're going to be doing those first 8 hours of waking up. So important. Those first 8 hours. And those first 8 hours are what's going to dictate how you perform that day. So if you can do all of your most difficult, most urgent, important tasks in those first 8 hours, whether that be trading related, admin, or anything like or work or whatever, then do it in the first 8 hours because that's when you have less limbic friction. Limbic friction is a term coined by Dr. Huberman. Highly recommend his podcast. And it's just a lot easier to get things done in those first 8 hours. There's another book called I think it's called Swallow the Frog or something like that. But yeah, so these are the kind of things that I like to do. We got Gershon Record saying, I struggle with a routine because I drive truck 18-wheeler coast to coast and my hands are on the wheel for 11 hours. So I struggle with being patient when I look at the market. Wow, this is common. I mean, I come across a lot of traders that are in these sorts of line of work. I currently coach a pilot, electricians. I've even got a diver. This guy dives for a living, and he does all sorts of amazing things underwater. And yeah, the hours are long, but you gotta. It depends. If you want to be a trader, you got to start thinking about figuring out and planning financially how you can start to reduce those hours or change job. Are you willing to make a sacrifice? Are you willing to downsize? Are you willing to reduce certain lifestyles, certain luxuries in your life in order to make trading work? I said it's a difficult question. It's a difficult thing to do, especially, if there's no other work available. It is difficult. Now, 11 hours, I mean, it's a lot. It's a lot. So it's very difficult to be able to be in the right frame state of mind to trade. So it's a difficult one. And it's just how can you change hours or change role in order to make trading work for you and your family? That's what you got to ask yourself. All right. We've got, a couple of comments on Wim Hof. Right. Yeah, you're welcome. You're welcome. I know it's difficult. I know it's a big decision, but if you're spending that much time away from family too, then you got to do what you got to do. If it's good money, do it for a little while, but don't
Yeah. I
don't
mean,
make
that's
it
what the
a career.
trading's good for, right? I mean, the trading's good to try and help you learn a skill set. You can listen a lot. There's a lot of things. I mean, if you're on the road a lot, then you can learn a lot, mate. So you're in a good position. You got to look at it that way. And trading can help. So
Absolutely. So I want to give you guys some tips. So we're coming up to wrapping up this podcast. I don't want to make it too long. We're coming up to the 60-minute mark. And I want to I want to give you guys something. You've been here all this time, and it's very much appreciated. And those of you who are interested in improving your trading, then scan the QR code.
Oops, sorry.
No worries. I'll bring it back. Scan that QR code, use the link in the description, and complete the survey. So I can send you some show notes. I can send you some tips on confirmation biases. And those listening in, taking notes, I want you guys to go away with something. And when it comes to these cognitive biases, it's all about questions. It's all about the questions that you ask yourself. And those questions, the quality of your questions determines the quality of the answer. And really, you should have a list of questions next to you so that you can mitigate the negative impact of these cognitive biases. It's really, really important. Always be asking yourself these questions. So for confirmation bias, you want to ask yourself, like, how often do you seek alternative viewpoints or contradictory evidence before making a trading decision? Can you recall a specific instance when confirmation bias led you to overlook crucial information that could have influenced your trade? What steps can you take to challenge your existing beliefs and reduce the impact of confirmation bias in your trading? For loss aversion, you want to ask yourself, how do you manage the emotional impact of losses in your trading? Does it significantly influence your decision-making process? I love that question. How do you manage the emotional impact of losses in your trading? This is a great one. This is such a good question. And it's a question that I ask myself when I'm visualizing. So when I'm visualizing my trading session, I ask myself, what is the emotional impact that I'm gonna have when I take a loss today? I'm already down 2% from last week, or I'm down. What Having another loss today, how is that gonna feel? And when I visualize it, it's gonna feel frustrating. I'm gonna feel annoyed. But because I'm visualizing it, I'm mentally rehearsing it, I know what I need to do. So instead of in the moment when it does happen, when I do take that loss today, I'm not gonna, just because I feel frustrated and annoyed, doesn't mean that I'm gonna start revenge trading. No, it just means that I'm gonna make sure I'm double checking the trade is correct, double checking my trading plan is complete, and planning on my next trade, preparing for the next day. Continue to follow the process. Another question for loss aversion is, how can you strike a balance between managing risk and allowing yourself to take calculated risks without being overly influenced by the fear of losses? This is so important to understanding your own tolerance. For anchoring bias, you want to ask yourself, have you ever found yourself holding on to a trade or a price target simply because it was your initial reference point? How did you impact your ability to adapt to changing market conditions? Yeah, this is a tough one. Actually, I would like to ask you, Kid, about that one. So I'll ask it again. Let me see if I can get it up on screen. So it's a really good question, especially if you're a discretional trader. So this is This is a question for anchoring bias.
Okay, which one is it? Is it? I
This one
just
here. I've just put it up on the screen. So, have you ever found yourself holding on to a trade or a price target simply because it was your initial reference point? How did it impact your ability to change when the market is adapting?
I
Or
mean,
how do
I
you
feel like
adapt?
I feel like we have to adapt with the market. So, oh, turtle soup. So we have to adapt with the market and with what prices is given within the market. Wow, right on my level. Um, and it's just that simple. You have to be able to adapt, and levels are going to be if then statements, and you're going to want to offer if then statements within price, because you don't know, you're speculating, and you're trying
Mhm.
to operate on probabilistic measures. So you're trying to find confluence and ways to create probabilities, and your levels are going to be one thing that will validate and disvalidate those. So as much as people don't like having lines on their chart, they need to have uh, very well annotated levels, and they need to focus on those.
Yeah.
So
No, I like that. So you kind of have a dynamic approach, an approach that you're always ready to adapt, and you have these sort of if and when syntaxes of if price reaches this point and then does this, this is what I'm going to do.
right, I mean, and that's the framework, right? Like that's what we're looking for within a framework, is for, like, even today, simply already knowing that it was going to be a seek and destroy day. Your profit targets, your framework, the type of trade, the trade plan that you would be in, everything substantially changes with how you strategically would approach, operate, or optimally choose not to operate when you're in scenarios that don't allow for clean, clear execution.
Love
So,
that. Love that. So I want to start wrapping things up,
yeah, it's a good time.
and these thought-provoking questions, they're really designed to encourage self-reflection and stimulate that awareness of these cognitive biases. And there are more. And if it's a topic you want me to continue to cover, then let me know in the chat. Let me know on YouTube. Let me know on Twitter. Reach out to me, and I can discuss these in a little bit more detail in the future. Or if there's any other thing that you want me to discuss, I'm happy to take your suggestions so I can start planning ahead for future episodes. Um, in the next what we have lined up in the next few weeks for you guys is it's pretty awesome. We've got kits, AM sessions continuing. We've got funded Fridays, and we've got some really cool guests that Jade Cap is bringing in. So make sure you tuned in to announcements on Twitter, where we are announcing future episodes. Stay tuned. Make sure that you guys are subscribing to the Trader Roundup YouTube channel. Um, I'll leave a QR code here to follow us on YouTube, and hit that notification bell so that when we do plan one of these live broadcasts, you come along and we will answer your questions live, just like we've done today. And
yeah, we love doing it. I
we
mean,
love
quite
doing it. And in fact, we will bring some of you onto the stage live as
yeah, we're
we've been
getting
doing.
better at it, slow but sure. More of the 7:30 a.m. We will be showing here on YouTube. Even when this ends, guys, there's a decent chance I might just pop back on. So feel free to watch live streams, look for content from us. If you want to know more, you want to learn more, you want details, show details like newsletters, details of content that comes out, all you got to do is just sign up at the website. That's it. That's why there's a QR code. We make it simple. It's all done via email, so it keeps it clean, easy, less dependent on Discord or Twitter or anything else. But we're here. We want to be here on YouTube, and we want to coalesce and come together as a community. So thank you, Rodrigo, for everything again today. I really greatly appreciate your excellent content.
My pleasure, Kit. Thank you all. And we will see you in future episodes of the Trader Roundup Mindset Mondays. Thanks very much, everyone.